Swayam Prabha. Digital India. Educated India.
Now let us look at the business plan. We'll keep this session short. I have spoken too long already. So we'll keep this session short, and what I will show you is how the business model canvas connects to a business plan. So typically, all of the questions we have been discussing in the sessions, you would have already realized that they are interconnected or interwoven. Customers have unmet needs, and you have to find a way to target those customers. You have to do it in a manner that is profitable. If you have a startup, that startup is part of a value chain. You will have some technology capabilities which lead you to make a product or a couple of products. You can go after 4 or 5 different markets, but you have to choose one at the start. All of these are interrelated ideas. And ultimately, you have to do better than competition, even when competitors know about you. So they should not easily be able to copy what you do. So that links to this public disclosure aspect. If you divulge something that makes it easier for someone to copy what you are doing, then that is a recipe for more challenges. So for the business model canvas, what you say in terms of key assets can be used for describing your company. So the points that you fill in here for your business model canvas, the same points can be utilized when you are filling in the business plan. Now, next week, we will be talking about your capstone presentation. So typically, how do these kind of processes play out? You go somewhere at an event, you meet some people, you talk briefly to them a couple of minutes about your idea. And in some cases, people are very interested. They will say, let us set up a meeting. I want to learn more about your idea, right? So first stage, you should have about a 30-second or 1-minute pitch, elevator pitch, that what is the idea, why is it important, what is that big need you are serving, couple of sentences. Then as you move further along, you might get invited to pitch competitions where they will say, give us a 10-slide pitch deck. And there are all different kinds of competitions. Some might have more slides, some might have less slides. Typically, the more challenging thing is less slides, less time. How do you convey promise? How do you convey that, yes, this is a great idea? Now, one perspective that you have to remember when you are pitching is the people who are evaluating you are listening to 10 ideas, 20 ideas, 50 ideas. And after listening to so many ideas, they should remember you. They should remember your idea. So your promise should, or the strength of your idea, the quality of your idea should shine over the competing ideas. Which is why even when you have 10 slides or 1 minute to talk to somebody, what you say has to be really meaningful. And sometimes that meaning comes because that couple of sentences you show, you have talked to the farmers, you have talked to those rural healthcare doctors, primary care physicians, you have talked to 100 of them. You really understand the problem. You should reach a stage where, irrespective of which institution in this country you are, which room you go into, if you are talking about an unmet need, you should be that expert, because you know what a primary healthcare doctor is thinking in a remote village in Karnataka or in Kerala or in Tamil Nadu, because you have gone there, you have talked to that person. It's quite possible that the other people in the room may not have. So what will give you confidence? That hard work that you have done of going there and talking to the real people facing that problem. And once you reach that level, then this will become a whole lot easier. and what you say will become very, very convincing. So the business plan has all of these components: the customer segment, customer relationships, distribution channels, all of it, the bullet points or the text that you write will fit into the marketing part of your business plan. What you talk about financial plans can be fitted into the cost and revenue discussion that we just had. So in effect, what these frameworks are doing is trying to get you to think in a manner that you don't miss any important point. You don't miss thinking about customers. You don't miss thinking about value propositions for stakeholders. And you have a clear reasoning that whether you get 1 minute to deliver an elevator pitch, 4 sentences about you and your company, or you get 7 minutes to talk and show 10 slides on your venture, or you get an invitation to submit your business plan, which might be 20-40 page document with appendices, you are ready with all of these. A critically important thing about all of these documents and pitches and drafts is that these are dynamic documents. Every time you talk to a stakeholder, you talk to more people in the market, your idea will change slightly. So it's not as if next week you make one set of 10 slides and 2 years later those same 10 slides will work. Most probably it will change. And it will change, it should change for the better, because you will have more information. Maybe today you don't have a patent file. Within the next 18 months, you may. Today, you may not have other team members. The next 18 months, you may. Right? So these plans will evolve over time, and you will become stronger and stronger in the way you talk about your idea, in the way you talk about your idea to people who are not from your sector. Because the questions will change. The first time you will get questions, you will note that your answers are very quickly sliding into your disciplines, acronyms, and jargons. Because that is your training. You will quickly get into, well, this is the technical discipline. I was using these, I spent a lot of time with engineers, and it was so easy that they were half the time talking in acronyms. Anechoic chambers, and this is the kind of Smith charts that we use to do these calculations, and these are the kind of semiconductors and substrates that we work with. That's the natural language. Over time, you have to change from that and say, I am making a medical device to treat preventable blindness for children in remote villages. The substrate is just part of the story. People don't want to know about the substrate. What they want to know is, what is that big problem you are solving? How you do it, you don't need to tell. In a business plan, you don't need to tell in a presentation. You have to say, what is that goal you are working towards? Okay. So the components of a business plan are an executive summary. The important thing to remember is this executive summary, which is 1 page or 1.5 pages long, is written once you have written all of the other sections. So it is the first thing in that plan. It is like an abstract for a research paper, but you write it once you have completed the other sections. Then you talk about your company description. What is your status? Did you incorporate or haven't you incorporated? Is it a partnership? Who are the other people? In that, you can talk about a little bit about your intellectual property if you want. Then industry analysis. Now you know you are part of an industry. Then you talk about the target market. You talk about the competition. Each of these things we have discussed in earlier sessions. You know how to compare vis-a-vis competition. Use the competitive matrix. And say, we are a safer battery, higher performance battery. lower cost battery. Then strategic position and risk assessment. Think about the value chain. What is your strategic position? Are you that last firm which holds all the cards? All of the other firms can only get to that complete package if they work with you. Are you the Monsanto of your ecosystem? Then, especially for science-based ventures, think about the regulatory aspect. How do regulations fit into your development plans? What are the certifications you need before you can offer your products on the market? Certifications might change by country. So if your first market, that first pin is the US, the certifications you need for the US would be different at times for the ones that you need for Europe or for South Korea. Some things might be common, others may not, right? So there might be specific things. So you have to understand not just the list of things that you need to have, you also need to understand what are the requirements of those packages that you have to submit for approval. You have to understand how much time it will take, how much you will budget, what average time you will find, most probably it will take more than that. So you have to be prepared for that. Then you talk about your marketing plan and sales strategy. So you know that there are these customers that are your target customers. How will they know about you? What is the distribution channel? Will you have your own sales force or will you partner with some other agency that has its sales force? Is your technical capability in manufacturing and you outsource one or two components like we saw in the business models of a couple of our companies in India, that some critical parts are outsourced, are brought in, imported from other countries, and the rest of the assembly takes place here. The medical device is then provided as a fee for service or as a device itself, one-time payment for remote rural clinics. Then operations, again, deals with manufacturing. Then technology plan, more and more, because many ideas have some element of data. Nowadays, you have to really think about cybersecurity and data protection. Whether you are in India, whether you are elsewhere, at the very least, you have to be really, really carefully protecting data. I personally know of a small business, not science-based, where all of the business was run from their personal laptop. One laptop, all of the data of their whole business is in that one device. When traveling to the US, the laptop was in the back of the car, went to stop for coffee. When they came back, laptop is gone. Everything. All the contacts, all the data. And of course, person recovered and tried to manage and business still exists. But you want to have at least the bare minimum. You need to have some data backups. You need to have some plans that suddenly out of the blue, just because you decided to have coffee in one place shouldn't be the reason why you struggle for the next 6 months. Right? These are practical problems people will face. Cybersecurity is such a challenge. Small, large companies, hospitals, airports across the world, across India too, are being faced by all kinds of cybersecurity issues. As you are growing and scaling, you don't want that to be a challenge if you can protect or manage. So the best part of being a startup is you have the ability to start strong. The bigger challenge for many of these big companies is they have these legacy systems that were from the 30 years ago, 40 years ago. And it is very difficult to change all of those systems across the whole organization in various parts of the world or various parts of the country. It's very capital intensive. Because you are starting small, you can start strong. So there are some advantages to being a startup. You are agile, you are quick, you can take decisions fast. Then management and organization. I will have one more day with you next week where I will talk about the team in more detail, because one of perhaps the most important things investors look for is the team, even beyond the idea. So if you have an average idea and excellent team, chances of getting investment would be higher. But if you have a great idea and a poor team, then chances of not getting investment would be higher. The team is really, really important. And then you have to show relevant qualifications, relevant experience, what kind of roles will people take in that organization. Remember the previous slide I showed you. If we had somebody in finance, if we had somebody in operations early on, the story could have been different. Right? So you really want to make sure that you have thought about these plans. You have thought about what are the capabilities that you have as an individual. What are the other capabilities needed for the startup? Who should you have together with you as a co-founder or as a consultant or as an advisor, so that those gaps in skills are packed and you are able to move forward. Development plan, milestones and exit plan. So you should be easily able to say, for the next 18 months, this is what I'm going to do. This is my target. This is what I'm going to achieve, whether it is standards, whether it is IP, whether it is hiring people, whether it is doing further testing to improve your product. For that battery manufacturing case that we have discussed, maybe your target is, I want the safest battery on the market because this is an implantable medical device. Right? So for your category, what is that key factor that you are working towards in terms of technology development? How much time might it take for you to get there? And sometimes the answer is, well, the current lab I am in does not have all the resources, does not have all the equipment, does not have all the facilities. So the follow-on question to that is, well, which lab do you need to partner with them? Which is the other lab in the country that has all of that? Then you find a way to connect with that lab, right? So for every question you face, there will be some answer or some approach. So which then means, if you know what is that other research lab, you will try and find conferences or events where you can connect with those people there, and then you move forward. And very soon you will realize that all of the hard work that you are doing, even if some person knows some part of your idea, they are not doing the hard work that you are doing. So it is very difficult for them to replicate. So the more you invest in your idea of your own time and effort, you will become a specialist, and it will become difficult for people to copy what you do. Then financials, at the very least, you want to have a clear idea of the kind of costs that will be occurring on a regular basis. What are the ways to bootstrap, which is another word for getting things done for free or at low cost. The first day I talked about strategic timing of firm formation, right, as one of the key factors. If you haven't technically or legally formed your venture, as a researcher, you can do many things in the labs at low or negligible cost. So it becomes really important to figure out most of the things, do most of the collaborations as a researcher, and then form a venture when you have almost all of the things in place. Otherwise, once you start that venture, then immediately legal entity, which should be paying all its bills on time. Right? Now, I give this with a caveat saying that there will be some incubators, accelerators, all of this, which will say that, well, you need to have a certain status and incorporation, then we can help you. So you have to find out the pathway that works best for you. Then there are appendices where you can provide more information. What kind of information can you provide? So if you are starting a manufacturing facility, you can say, well, where are you going to be located? What are the leases? What are the contracts? Purchase orders, letters of intent, intellectual property, what are the trademarks, licenses, patents that you have. When you talk about team members, what are the resumes of the owners or key employees, technical staff, any advertising or marketing materials. So this is extensive and very detailed. You may not need all of it on day one, but over time you want to work towards this. blueprints and plans, list of equipment for sure you will need, where will you source that equipment from, what is the cost of that equipment. One of the startups that I worked with, an ag tech startup, they started and then COVID hit and they were building their equipment. And there was one part they were either sourcing from either South Korea or Australia. They were thinking they'll get it in like 45 days. It took them 6 months. Now, because of COVID, shipping and everything. And they had, in a way, they were lucky, they had gotten venture financing. But the clock is ticking, COVID or no COVID. And they can't move forward because that critical part is not there yet. It will take 6 months. You cannot do anything. The costs are even higher during COVID. And so all of their development efforts got delayed. Meanwhile, there is pressure from investors. You have taken our money. Where is the progress? So in many instances, VCs operate under the assumption that only a fraction of the ideas that they invest in will be successful. And so out of the hundreds of business plans that they read through each year, they will invest only in a couple of them. And the hope is out of the couple that they invest, if one or two or a couple are successful, that will cover the losses from all of the others. So that's sort of the base model, right? Now the challenge often is that when you get this investment, you are on a clock. You have to do reporting. They will want to know. Sometimes they want board seats. Sometimes, like the example that I gave of the founder and the CEO having divergent opinions, you as a founder or a scientist, you might have a different target market or a different application, and your VCs and other investors might say, well, that is going to take you 4 years. Here is this market application. We want you to focus on that, right? So in effect, what is happening? Because you took on finance, you are losing some control, right? And why do people become entrepreneurs? Because they are really passionate and they want control, right? So this is a little bit of a balance or a dance between investors and entrepreneurs. Is how do you move forward without losing too much control, right? I also know personally scientists who have lost most of their control. And so ideas that they worked on for 20, 30 years, they started the venture. They didn't fully understand the way the legal agreements were being set up. So the company exists, doing really well. But now the founders they have hardly any control. They are just like any other investor. And control is somewhere else. You have to be careful. Sometimes getting money is also a problem, right? So you have to be careful how you move forward. Now, one quote I perhaps didn't put here that I typically have is the best form of revenue is a paying customer. So it is great if you don't have to ask anybody for money. Stem cell did it like that. They grew organically very slowly year on year. And because they didn't take money from anyone else, they are not beholden to anybody. Right? They can decide whatever they want to do. No investor or financer can tell them anything much. So it's again, as depending on where you are, whether you bootstrapped, whether you did strategic timing and did most of the things prior to starting your venture, so that when you started the venture, you had a revenue stream quickly. So you never needed to ask a lot of money from some investor, and therefore you didn't lose control. Right? So these are all the ways. And all of this is like, I'm giving these very generic sort of statements, but it all depends on your technology, your TRL level, what your customers are doing, what is the market structure, what is the level of competition you have. That will, all of these have to be taken together for you to decide how you want to move forward. Then market research studies, whatever you have done, any assets that can be used as collateral, you might put your business model canvassing. So these are all ways in which, if you look at it big picture, what are you doing with the business plan? You are conveying that you are worth investing in. The big picture of this whole exercise is you are de-risking an idea that to some others would seem risky. You remember we had this slide where were these a figure, there were these two circles. There was a technology venture with low uncertainty, short timeline, and a science-based venture where the uncertainty was high and it is going to take a long time. So with a business plan, with all this analysis that you have learned over the last couple of days, what are you doing? You are trying to convey that we have done the work to minimize the risk by targeting the right market, by targeting the right set of customers, by focusing on a product that these customers will want, by charging a price that the customers can pay, and therefore having a revenue stream, which means that we have a better chance at surviving. So one thing that we believe in is it's starting a venture is just part of the story or the first step. Whether your venture survives 5 years, 10 years, that is the real test. Many places, the metrics are how many ventures did you start? Bigger question is, for the ventures you started, how long did they survive? Did they succeed? Were they profitable? That is the bigger question, right? And many people don't sort of focus on those aspects. It is tougher. Okay. So the executive summary, which was the important part. So all of the parts, basically, all of these parts we have already touched upon in the earlier sessions. I want to spend the next little bit of time talking about the executive summary, that important part, which is just 1.5 pages at the start of your business plan. Now remember, many of these VC investors, angel investors, they are getting a number of business plans each week. They will do a couple of hundred each year. And then they will pick and choose a few to invest in every year, right? And sometimes they are just looking at that executive summary and saying this is not worth reading. So the executive summary is that important. It is the essence of your whole idea compressed to 1 page or 1.5 pages. That is the pathway to get to the funding that you may need. So it has a couple of subsections. Now each of these sections is just 2 sentences, maybe 3, not more. The graph. So whenever you start a very nice novel, or when you look at a very nice news article, there is a hook. There is that one title. Sometimes it's called clickbait. There is that one thing that, oh, I should read this. Same way with the graph. Of course, you want to be authentic. You don't want it to be like clickbait, but you want it to be something authentic that people want to read further. You want to encourage them, motivate them. You should lead with the most compelling statement of why you have a really big idea. Usually, this is a concise statement of the unique solution you have developed to a big problem. It should be direct and specific, not abstract, which is a mark of an early stage idea, is that you are like very big picture goals. I want to solve pollution across the world. It's not clear air pollution. It's not clear noise pollution. It's not clear water pollution. It's not clear which country. It's not clear with what technology you are going to do it, for what set of customers. So the direct, specific solution. The problem, you may need to make it that this is a big problem. It's an important problem. For example, you can say cybersecurity. The more you have data, the more valuable that data is. Everybody wants it to be secure, right? Big problem. Passwords, they can be hacked. I was reading yesterday, there was a long list of common passwords. Most common password, password. Right? Second most common, 1, 2, 3, 4, 5, 6. Right? How can you have data security in that environment? Then solution. What specifically are you offering to whom? Software, hardware, service, combination. Commonly used terms. Don't use acronyms here at all as possible. And state concretely what you have, what you do that solves this problem that you have identified. Then the opportunity. Remember, this is for people who expect to make money when they work with you. They are not doing it for public interest. It is like you are going into a bank, you want to put in an FD, if people do it even now. You will compare and say, this is where I will get the most return, right? So same way, these investors are evaluating your idea and saying, that's a promising idea. That person has got product market fit. They have done technology market matching properly. They have figured out their first market. I agree with that. They have a clear go-to-market strategy. They've figured out distribution. They know what the pricing is. They've got a very strong team. All of that should be conveyed in just these sentences. 1 page, 1.5 pages. And for the market, you are saying, what is the size of that market? Does that same market exist outside India? Will the product sell in China, in Europe, in US? They are starting from India. They will grow in India. But can this idea also work elsewhere? Is that medical device needed in other countries? Can it be sold in South America? Can it be sold in Indonesia? Then what is your competitive advantage? Your real sustainable competitive advantage. Even when you launch your product on the market and your competitors know your device, know your product, know your service, they still cannot compete with you because either you have intellectual property or you have some ability to do something better than others. They cannot copy. Or if they copy, they cannot meet your price. Or if they copy, they cannot meet your quality. Then the model. Now what happens is, especially for science-based businesses, like I said, the first several months or several years, you may not be generating revenues. You're still doing research, you're refining. Now, in that case, how does an investor decide that you are making progress? Typically, what happens, like the timelines that I've shown in earlier figures and the papers that you got, all of the money you need, they are not going to hand it over in one shot. If you need $2 million, you might get 250,000 in for the first 6 months or 1 year. Based on the progress you make in the first year, you might get some more funds. So how do we assess progress? There are no sales. Progress is intellectual property filed and granted. Progress is you hired a team member who has extensive experience in that industry. Progress might be you are building out your sales team. Progress is that you have signed partnerships like Accelera did with those 150 partnerships that they signed. So all of these are ways you are signaling to investors that things are moving forward. You are not stuck. So in your industry, what are the critical metrics? Customer, licenses, units, revenues, margins, and what are the impressive levels? You have to really convey to investors that yes, this is a strong, robust idea. These people are going to go places. They are going to really grow very fast. And then the team. Why is your team uniquely qualified to win? Suppose you hire a great person, your competitor also hires another great person. How do you make sure that your team has something specific that others cannot copy easily? The promise. So remember, because this is investors, they are looking to make revenue. Not only should you give the impression that they are not going to lose money, investing with you, you should give the impression that they are going to make a lot of money. So you are inviting them to partake in future profits in a way. So you should convey the ability to generate lots of future profits. You have got costs under control. You have got a strong sales and distribution team. Sales will increase year on year because the margins are high. Every year when you sell more products, more funding will come in, which means that the VC can divest their position and exit through an IPO or through an acquisition in a couple of years. And so they are interested in partnering with you or funding you. And then the question is, in many instances, people do all the things and forget that they have to ask for funding. And I see that many times. They'll do all of this work and there will be nothing. So we don't want anything. We were just making this document. We were just giving the presentation. Now, in early stages, it may not be clear how much do you want, because you need to, the number doesn't come out of the air. You don't say that I need $1 million or $2 million just because I came up with that number. There has to be a logic. The logic is, well, I need these 5 pieces of equipment. The prices for that equipment, if I get it from South Korea or China or Australia or someplace, this is the price. This is the shipping cost. This is the installation cost. This is the regulatory cost. This is the technician salary. This is the cost for setting up or leasing a warehouse. So the numbers have to come from somewhere. And then once you ask for a particular amount of funding, then you have to tell them how you are going to use it. So suppose you are asking for $200,000 or $500,000. You might say, where I am at in terms of TRL levels, I need to spend money on research. For someone else, further down in terms of TRL, they will say, I need to build my sales team as Kala Pharmaceuticals. So depending on where you are, you will have to show how you are going to deploy the funds if you get that. Now, in case you are very early stage and you don't know yet the amount of funding that you want to raise, you will probably want to say that I am looking for mentors. I am looking for contacts. So these are other things you can ask for. Say that I am very early stage. Can you give me some feedback or advice, or can you suggest next steps for me? So that's all fair as a start, right? So whenever you are going to some of these competitions, you remember, I don't know any of you watch Dragon's Den or any of these pitch competitions, Shark Tank. So for some of these, it is not so much about just the money that they are trying to get. It is the person giving the money, can they open their networks? Do they have some expertise? So typically all of the VCs or angel investors, they will tend to have some specialization. Some of them typically invest in biotech. Others typically invest in advanced materials. Third set might typically invest in ag tech ventures. You might find VCs that are specialists in some sector. So they will not only give you funds, but you can ask them, what are the advisory services? What are the mentors, networks, or contacts they can give? Because once they invest in you, they are your partners in a way. They want you to succeed. Only if you succeed will they make any money, right? So they are invested in you. They are invested in your future success. So if 2 or 3 VCs, if you are in the lucky position of having multiple people vying to fund you, then you would want to choose the ones who, along with the funding, give you some of these resources and access in terms of mentoring and networks. Maybe, like in many instances I have seen with the Langer Lab data that I collected, sometimes the VCs will come on board as advisors. Sometimes the VC will bring in that key CEO and say that this is the person This, we have a track record with that CEO. He helped us with another company, and that company scaled up and went fine. We can ask that CEO to join this venture individually, right? So VCs can help like that also, because they know and they have that track record in that industry and sector, that they know who can be the key people. And at that level, so Moderna, the person who was hired as the CEO was someone, his name is, I think, Stefan Bancel. So Stefan Bancel was hired because he had experience with a European biopharma company for a large number of years. And so he had experience building partnerships with large pharma. So if you are a small biotech company trying to grow, one of the key things that you want is the ability to partner with large pharma. So if you have someone as your own CEO who has earlier worked as CEO or at C-suite level with a large pharma company, it's all the more easier. That is why even hiring that single person makes a big, big difference. So Moderna's success, in part, also due to the efforts of Stefan Bancel. Now, all of this you should be able to do in 6 or 8 short paragraphs. By short, I mean 2 sentences or at most 3 sentences. All of this in a max of 2 pages, ideally 1.5 pages. And that is the challenge. And what you say here should match what you said here. So your executive summary cannot talk about marketing differently than what you say in your market section. It should all be the same. And that is why you write the executive summary at the end. When you have done all of the work in the other sections, you're very clear as to this is how we are moving forward. Then you take a summary of that section and put in that executive summary as 1 or 2 points. Yeah, that is why I think we have given an outline to you for your capstone presentation and have said that this is the sequence of the slides. Slide 1 is this, slide 2 is this. So that is one structure that you can use. Different competitions might give you different amounts of time, right? So there are some times where they will, I have seen people pitching with 30 slides, but they do it in 7 minutes or 8 minutes, right? Some of the best presentations you see just have figures and pictures, little to no text. And so you should be able to get to that level of essence that you just send the slide and people can see that narrative. And some of the best presenters that I have seen follow this sort of a path. So see, remember, this is, entrepreneurs are not, even though now this is a big, when you look at economics and economic literature, for the most part, it assumes that everybody is very cool, rational consumer who carefully make choices and evaluate everything perfectly and then pick what is the best choice. But when you think of your own purchasing behavior, sometimes there is impulse buying. You know that, well, I shouldn't have bought something so expensive, but you just wanted to do so. In real life, entrepreneurship is driven by passion. It can only be sustained by people who sometimes are quite unreasonable in their focus, right? And that passion should come through in your slides. That you are solving this big problem in the world. You are really passionate about solving that problem. You are not going to change just because you get a job offer and suddenly you leave the company and you go, right? So people should get that sense of focus from your presentation, focus on solving a big problem. And that is why some of the terms that I use for pitches is, you should be a good storyteller. People naturally gravitate to stories. If it is only numbers and logic, there are enough and more people just giving logic and numbers. But you have to really go beyond that to see, well, this is the motivation. I had someone in my family who struggled with this disease and I saw them suffering And I want to make sure nobody faces that situation. That's why I have personally met scientists. That's the reason they have started the company. And then whether they get funding or not, they will keep moving forward because they have got a job on the side. They are doing that. They are trying to move this research in the lab, and at some stage they start the venture. And a couple of these ideas are incredibly successful. It has taken them 15 years to do it, science-based ideas, but phenomenally impactful, growing across different countries now, but all driven by individuals who are very passionate because there was some personal experience. And this is not just one case of one scientist. In many instances, this is the case, that there is some personal connection, which is why I had that one sentence in one of my earlier presentations, right? And investors see that. They see that you are not going to be distracted. You are going to be focused. You're not going to change. And that also is the reason why other people join you on your founding team, not because you're going to necessarily make a lot of money. It is a risky venture, but they believe that there is a chance to make social impact. That is how you will get your first employees. That is how you will get your co-founders. Okay. I'm not sure I've given you a very clear answer, but I hope. Okay. Any other questions? So let's see what I have as a question for you here. So typically, I am ending each set of slides after each session with one question for you to think about. In this case, here is some quotes from venture capitalists who say focus is essential. The first phase of a company should be narrowly defined. That first pin, the first bowling pin. So focus just on that market, just that pin. You should be able to make it fall down. Most successful entrepreneurs tell you they have a great team. This is fundamental to your success. If there are two things that are important for a science-based venture, it is intellectual property and the team. Everything else you can be a little bit flexible, you can work, funding you don't have today, you will have tomorrow. Intellectual property and the team are fundamental to moving forward. And you have to be the passionate person who lives, breathes, eats, sleeps the idea. It drives you. And so the question from this session for all of you is, what is your development time over the next 18 months? What are your plans? How are you going to take your idea forward? What funding and resources do you need to move to the next stage? You need lab facilities, do you need incubator space, or you have moved further along, you need mentors. So in your mind, you should slowly start thinking that, well, this is my idea, this is the product that I want to make, this is the market I want to target it at. But to reach there, I need more information, I need more resources, maybe it is funding. So we will have entrepreneurs coming in tomorrow. You can ask them how they were thinking about these things. Like one of the ways I'm conceptualizing these sessions is now you have the language and the terminology to ask meaningful questions from practitioners, right? So when practitioners or entrepreneurs come, you should ask them about public disclosure if it is an IT person. For entrepreneurs, you can ask them how did they raise funding. You can ask them how did they decide on pricing their product. You can ask them how did they decide on their go-to-market strategy, right? Because now you understand these terms. You can ask them what is the value proposition. Why do people choose your product over competition, right? You know the important things to ask. And that is the value to be generated out of asking the right questions to the industry people who have lived this journey. I'm telling you about this journey because I have researched it. But there is equal value, more value in people who have lived the journey. They may have lived the journey in one sector. That sector may not be your sector, but there still will be value in learning from that journey. And if you get somebody from exactly your sector, if you're lucky enough, all the better. You have to learn. So you want to, one thing is what would get them to buy your product. Yeah, you are identifying unmet needs, right? So you are asking about interviews or focus groups, that set of things that I said, and what is the outcome of that process, right? So what you want to try and find out is what would get people to buy, what pricing they would be typically willing to pay. You can also ask them what the bigger question, what prevents you from buying. You tell them about your great product and they say, I'm not interested. Or this is a good idea, but I cannot buy it. That is a gold mine of information. You want to truly understand why people do not want to buy your product. Now, when I give this assignment to my students back in Canada, and they are some of them are undergrad students. And one of the things I tell them is, don't talk about your idea to your family and friends and say that I did a survey. I talked to my parents, I talked to my siblings, I talked to my friends. Everybody I talked to said fantastic idea. And then I come back to the class, I'm very happy. There is market. Everybody is willing to buy my product, right? You have to go and talk to people who don't know you, who are your true customers. It is like if you talk to somebody, the quick answer is great job. But what does that give you as information? Nothing much. What is much, much more valuable is somebody who says no and you are able to understand why they are saying no. So when you go to these customer interviews to uncover unmet needs and you talk about your product and they tell you, sorry, we are not interested, or sorry, we cannot buy this, try to politely ask them. Don't feel bad. See it as an opportunity to try and understand, well, are you not saying yes because it is, I'm saying it is too possibly priced too high, or maybe it is not the right way. I should not be telling you about leasing or one-time cost. Do you think that it is too, the competitor's product is too strong and this product is not strong enough yet? So try and unpack the reasons why people are saying no. Don't come back home and say, oh, I got an answer, I got a no. One of the things that every entrepreneur will say is that they have got a thick skin from getting the hundreds, if not thousands of no's, thousands of doors closed, hundreds, if not thousands of emails for which no response was replied or got. But over time, at some point, some doors will open, like that CureVac, that company that I was talking about, the biotech company at the start of today. Out of 200 interviews or discussions, they got one person who believed in them, and that was enough, right? And that set the ball rolling for the next set of funding. So the one thing that I can for sure, without risk, tell you is you will hear lots of no's. Just be prepared for that. But think about it from another side. For all of you who are researchers, you write research papers, you submit to journals. We are already used to getting lots of no's. When you submit a grant application, already used to getting lots of no's. So in one way, as scientists and engineers, when you think about the experiments you do, you're already used to many things not working. Right? In that regard, scientists and engineers and researchers are best placed to become entrepreneurs because we are prepared for failure and no's and we know how to rise up after that. Right? So that is my perspective on this. Always try to, in your customer interviews, try to unlock the reason why people are saying no. If you do that, you can improve or refine your product. and then they will have a chance to say yes the next time. Progress is not made if everybody just says yes, yes without. Sometimes they will say yes just to close the interview, not because they are going to quickly buy your product. Right? You have to be prepared. You have to be mentally strong. Okay. Any other questions? Yes. Typically, industry reports that are there that are public that will give you global market share, country level share. There are some estimates. It is not perfect. So you remember those figures. I think it was for the batteries when I figures, and there was just no. It was for the adhesive, the one which was doing continuous imaging. So continuous imaging, there was a patch. You the next 48 hours. So if you look at the other points on that figure were all references. They are all either published papers, reports. All of these are compiled to try and get some estimates of product performance. Sometimes there are paid sources. It is publicly available. You just have to compile it from different. Every investor understands that if you are 18 months, it is probably going to take 24 months. So it's going to hold you to exactly that number. If you say growth rate is 7%, it turns out it was 10. They understand, right? But percent and you are saying it is 3%, that's a problem. General ballpark, and that reports from studies, and it often helps to be a little bit more conservative. If you say that my target is, I got from one of the CEOs, is such that irrespective of tariffs, irrespective of changes, your business and your business plan has a way to succeed, then you have really thought it. If you will grow, and the term that CEO used was no matter what. No matter what happens in the world, there is a flood or a wildfire or tariffs or pandemics, your business model holds. People will want your product. People will pay for it. And you have a way to make that sale. Then you have got a really strong plan. And that takes effort. That takes time to get to that stage. And there are companies that have reached that level of precision that it doesn't matter. We will find a way to succeed. We have already thought of it. Our numbers are so conservative that we told our investor we will sell 100 units. We knew that we would sell 500. But all our estimates were based on that. If you don't already have some designing expertise yourself, you would want someone on your team to have that kind of expertise, right? Or you would want some advisor to say, well, this is how the fashion industry designs clothes, or, right? And then, right? So you have to find some way where your team member or your advisor connects you to that customer segment, and they give you the insights you need about that customer segment. Remember, I gave you the example of Barbara Beskin, the 91-year-old person who was on a product development team. Why? Because that team was designing something from older people, for older people. Right? So you want to try and connect it like that. Okay? All done? Good. So prepare lots of good questions for the entrepreneurs and for all of the speakers for next week. Draw on these questions that you will see in every slide that I have shared with you. These slides will also be shared with you. And then keep thinking and refining your idea so that you can draw fully from the experiences that the guest speakers will be sharing. Okay, this is a unique opportunity, like Professor Pillai said, that typically these kind of speakers, they will speak to an audience of hundreds and you don't have a chance to ask questions. In this case, it's a small, safe setting. Feel free to ask questions. And that will make it all the more a richer experience, both for the speakers as well as the